Okay, let's talk about IBM. International business machines, that titan of tech a lot of people had frankly written off. But lately, something's been stirring over at Big Blue. So the big question we're diving into in this explainer is a huge one. Is this recent success a real, durable renaissance, or is it just a temporary flash in the pan? Let's get into it.
All right, first up, let's just talk numbers, because this one is, well, it's pretty hard to ignore. Over the past 12 months, IBM's stock has jumped a massive 28%. Now, that's not just good. That's better than the S&P 500, and it's blowing most of its old-school tech rivals out of the water. This isn't some tiny flicker of life. It's a huge signal that Wall Street is starting to believe in IBM again.
And look, this isn't just hype. You can hear the confidence straight from the top. CEO Arvind Krishna was not messing around when he talked about their new Z17 mainframe. He called it, and I quote, the strongest start of any generation. That kind of conviction from the CEO, it's contagious, and it's built on some really solid wins happening inside the company.
So yeah, with all this momentum, it's no wonder people are starting to throw around the term Big Blue Renaissance. It really does feel like a company that's firing on all cylinders, hitting a stride we just haven't seen from them in, what, a decade? And the timing of all this is absolutely critical.
And speaking of timing, we're talking about this at the perfect moment. The stock is floating right near its 52-week high, and everyone is laser-focused on April 22nd. Why? Because the market is betting that IBM is about to report its sixth straight double beat. That means beating Wall Street's expectations for both revenue and earnings. The stage is totally set for this comeback story to get a huge stamp of approval.
Okay, so that's the what. The performance has been impressive. But the million-dollar question is why, right? What's actually under the hood here? What's fueling this so-called renaissance? Let's unpack the main growth engines that are really driving this thing forward.
And here's the thing, it's not just one magic bullet. It's a whole bunch of different strengths all clicking at the same time. You've got the Z17 mainframe having its best run in 20 years. Then there's the software division, now their biggest and most profitable part, growing at a crazy 14%, with AI just crushing it. You've got acquisitions like HashiCorp that are already breaking booking records. And get this, all of this is happening while they're keeping up an incredible 27-year streak of growing their dividend. This is not a one-trick pony, folks.
Let's just zoom in on that mainframe for a second, because this thing is an absolute beast. The Z17, which came out in 2022, is just packed with insane tech, like its own built-in AI chip and cryptography that's ready for quantum computers. So what does that mean in real terms? Well, it led to a mind-blowing 67% year-over-year revenue pop in a recent quarter. The mainframe isn't just surviving, it's absolutely thriving.
But, and you knew there had to be a but, for all of this amazing news, there is one cloud hanging over this sunny picture. One big question mark that looms over this whole Renaissance narrative. And it all comes down to the crown jewel of their massive 2019 acquisition, Red Hat.
And this chart, well, it shows you the problem perfectly. This is the core issue. After years of really strong, consistent growth, Red Hat's hybrid cloud business slowed down. It went from 14% growth in one quarter down to 10% in the next. This is the first time we've really seen the brakes being tapped since IBM bought them, and it kind of throws a wrench in the whole software is our future story.
So what's going on here? Why the slowdown? Well, it's probably not just one thing. You've got the shaky economy, which makes some companies hit pause on big spending. At the same time, the competition is getting fierce, with other companies like Susan Canonical making moves. And honestly, some of this might be self-inflicted, like some licensing changes that didn't go over too well with the open source community. The point is, this isn't a simple problem with an easy answer.
So this really sets up a classic tug-of-war for IBM's future, right? You've got these huge opportunities and tailwinds pushing him forward on one side, and then you've got these pretty serious threats and headwinds pushing back on the other. Let's just lay them out, side by side.
This table, I think, captures the tension perfectly. The upsides are massive. They could be a leader in AI governance with watsonx, and they're building the foundation for the next wave of AI. These AI agents that can handle complex jobs on their own. But the threats? They're just as real. You've got brutal AI competition from Amazon and Microsoft. Their huge consulting business could get disrupted, and you can't ignore the fact that, long-term, the mainframe market is probably shrinking.
And if you want to see just how intense that competition is, just look at the cloud. I mean, AWS, Azure, and Google are the absolute Goliaths here. With what, a combined 67% of the market? IBM is playing with just 3%. It means they have to be smarter, right? They're not trying to beat them head-to-head. They're trying to be the hybrid cloud guy who helps everything work together. It's a good strategy, but man, it shows you what a tough neighborhood they're in.
Okay, so all of this brings us to what I'm calling the moment of truth. That upcoming earnings call on April 22nd, it's not just another quarterly report. It is a massive test for this entire Renaissance story. So I'm going to tell you exactly what you need to be watching for.
When you tune into that call, there are 5 key things. Number 1, Red Hat. Does that growth number bounce back, or does it keep sliding? Number 2, the Z17 mainframe. Does it keep up its strong performance? 3, watsonx. Can it keep up that incredible growth? 4, HashiCorp. Do they give us good news about synergies? And last but maybe most important, the guidance. Do they stick to their growth targets for the full year? The answers to those 5 questions are going to move the needle big time.
And that brings us right back to where we started, to the central conflict. The Big Blue Renaissance feels real. The momentum is definitely there. But that concern over Red Hat, that's real too. So the ultimate question we're all left wrestling with is this. Is the Red Hat slowdown just a little speed bump in an otherwise amazing comeback story? Or is it the first crack we're seeing in the foundation of this whole renaissance? April 22nd is going to give us our next big clue.